of those issues.
Lenny, we have to go, but do you think these numbers will satisfy the public in terms of holding someone accountable and these companies accountable, if that's the right place to go to for what's happened here?
I think if these numbers lead to a global settlement, to a much larger settlement that wraps up all the litigation, you might see some satisfaction on the part of some people. On the other hand, there are people who really want the companies to admit wrongdoing, say they're sorry for what happened, and so far, at least in today's settlement, that didn't occur.
Okay, thank you both, Lenny Bernstein and Ildiko Mejas. Appreciate it very much.
Thank you.
Still ahead, a little home could mean big profits. The trend that's picking up in the housing market, we'll tell you about it. But first, small caps underperforming over the past year. Is it time to buy some of these names at a discount? We'll talk about that next.
If you're on Medicare, remember, the annual enrollment period is here. The time to choose your Medicare coverage begins October 15th and ends December 7th. So call United Healthcare and take advantage of a wide range of plans with a variety of benefits, including an AARP Medicare Advantage plan from United Healthcare. It can combine Medicare Parts A and B, which is your hospital and doctor coverage, with Part D prescription drug coverage and more, all in one simple plan. For a low monthly premium, or in some areas, no plan premium at all. Take advantage of primary care doctor visits, preventive dental care, and an eye exam, all for a $0 copay. Plus, earn rewards for completing other preventive care activities, like flu shots and annual physicals. You could also get over $150 in free health and wellness products. So now's the time to look at United Healthcare's variety of plans and let us help find the one that works best for you. Also ask about our PPO plans that let you see any doctor who accepts Medicare without a referral, and take advantage of in-network costs, at home or traveling, when you see doctors in the United Healthcare Medicare National Network. With many of our Medicare Advantage plans, you'll have $0 copays on the most common prescriptions. In fact, last year, our Medicare Advantage plan members saved an average of over $6,500. And with Renew Active, enjoy a free gym membership and up to $115 in rewards for staying active. You can count on our guidance and support to help you get the most out of your plan. We can also help you schedule appointments or find a specialist. Annual enrollment ends December 7th. Start taking advantage of all the benefits of the only Medicare Advantage plans with the AARP name. We make it easy to enroll too. So call United Healthcare or go online today.
Oh no, there's a monster at my door.
Trick or treat.
You can have a couple more.
Thank you.
Feels like a broken record. Stocks are once again inching closer to record highs, but unable quite to get there today. And now it seems like positive news on the trade front can't even give things a jolt. The president saying in the last hour the trade deal is coming along great, and Trade Representative Lighthizer saying the goal is to have the Phase 1 deal completed by the Chile summit. But joining me now is Simeon Hyman. He's global investment strategist at ProShares Advisors. And Simeon, for all that, the Dow's up 25 points. Now, granted, Boeing's weighing on things a little bit today, but why not more optimism? Or how much does the progress in the U.S.-China trade talks matter right now?
Well, first, your point is well taken. The S&P and the NASDAQ are up much more than the Dow. So there is some positive movement happening. But we are indeed in an environment where, first, you can't really say that stocks are maybe more than 10% off fair value, even given low interest rates. And earnings season, look, it was almost a sigh of relief last week that the banks had some decent numbers. But we're still talking about bouncing around zero earnings growth. So there are not a lot of other places for upside to sort of feed upon, even though, of course, a resolution on China or Brexit would be great.
So what's your best recommendation right now in terms of positioning, whether it's within the U.S. or internationally for investors?
I think it still makes sense to look domestically because, the hair on Europe, even if all this stuff is solved, all of a sudden Germany's in a recession.
Right.
And in the meantime, in emerging markets, you've got Hong Kong blowing up, Chile blowing up, and South Korea is in the toilet because they're having trouble with the China trade issue.
Right.
So if you're staying domestically, there are a couple of opportunities to go a little bit risk on. Small caps have sort of woken up. It's on the value side they've woken up. We think that makes sense, although perhaps even more down the middle of the style box and a quality approach, in particular small cap stocks that have consistently grown their dividends, is a great idea.
Okay, anything else you'd mention in there as well?
Yeah, the other thing I would note is also we note that technology has started to turn around, and that's a lot of that has to do with the potential upside from the China trade deal. But here I think you can look at some of the old school tech. Think about the techs that had, the consistent dividend growers in tech, they're there. And in addition to the potential upside from the benevolent resolution of the China trade deal,
if that's what we get.
There's another piece that people have forgotten about. We had this big corporate tax reduction, and it's already almost in the rearview mirror.
Sure.
First principles of economics. That ultimately gets passed through in terms of price when you're in a competitive industry. You need a moat. You need differentiated product to be able to hold on to that tax break. That's a pretty good description of some of the old school tech companies.
So stick with the ones that have the moat, that pay those dividends,
That's right.
that grow.
That's right.
All right, people can hunt around with that information. Simeon, thanks very much. Good
Thanks
to
so
see
much
you.
for your
Appreciate
time.
it. Simeon Hyman of ProShares. Now to Sue Herrera for a CNBC News update. Sue?
Hello, Kelly. Hello, everyone. Here's what's happening at this hour. The Speaker of Britain's House of Commons turning down the government's bid for a new vote on its Brexit divorce deal. It is a blow to Prime Minister Boris Johnson's plan to take the country out of the European Union at the end of the month.
Today's circumstances are in substance the same as Saturday's circumstances. My ruling is therefore that the motion will not be debated today, as it would be repetitive and disorderly to do so.
A small plane that went down and missing en route to Raleigh, North Carolina, has now been found. Debris from the plane was discovered in a tree at a nearby heavily wooded state park. 2 people are confirmed dead. The search began Sunday evening when the plane disappeared from radar on approach to the airport. And consuming dairy products may increase the risk of prostate cancer. Researchers from the Mayo Clinic reviewed a total of 47 studies involving more than 1 million people. Those who consume dairy products the most had a higher risk of developing prostate cancer. You are up to date. That's the news update, Kelly. I'll send it back to you.
All right, Sue, thank you very much. Sue Herrera there. And here's what's still ahead on the exchange.
Ahead, Wall Street's love for Peloton is overwhelming. Zuckerberg's wise words. The next time you get something from Amazon, make sure to check the expiration date. And companies are starting to question whether influencers really pay off. That's all ahead on the exchange.
Hey, I'm Alex.
Ah, the noob. Answer. Come around here. I'll show you how we do things.
Perfect.
Oh, you got your basic productivity suite here. You got your email. You got your company portal, production portal, sales app, and social. My avatar's a manticore. The HR sites. Put your hours there, PTO there. Payroll's a different beast entirely. Cloud storage, doc storage, which require a 15-digit passcode changed every 9 days.
So how do you get anything done around here?
Oh, for that we use Smartsheet.
Great.
Get right to the work that matters with Smartsheet.
Do you have a life insurance policy you no longer need? Now you can sell your policy, even a term policy, for an immediate cash payment. Call Coventry Direct to learn more.
We thought we had planned carefully for our retirement.
But we quickly realized we needed a way to supplement our income.
Our friends sold their policy to help pay their medical bills. And that got me thinking. Maybe selling our policy could help with our retirement.
I was skeptical, so I did some research and called Coventry Direct. They explained life insurance is a valuable asset that can be sold.
We learned we could sell all of our policy or keep part of it with no future payments. Who knew? We sold our policy. Now we can relax and enjoy our retirement as we had planned.
If you have $100,000 or more of life insurance, you may qualify to sell your policy. Don't cancel or let your policy lapse without finding out what it's worth. Visit CoventryDirect.com to find out if your policy qualifies, or call 1-800-514-7800.
You're in charge of hiring, and Indeed has solutions, like online skills tests, which let a candidate show that they are the right hire. And we give you this toy monkey, who will bang its symbols when the right CV appears on your desktop. Okay, there is no monkey. There is no monkey. But there are online skills tests.
See why more than 250,000 companies in the UK use Indeed for hiring. Visit Indeed.com/try today to try skills tests for free today. Terms and conditions apply.
Get ready for Brexit on the 31st of October. Find out what you need to do to prepare at gov.uk/Brexit.
We do the research, you reap the rewards. Head on over to cnbc.com/select.
Earnings Central comes alive. Numbers and instant reaction from these corporate giants. Plus P&G's CFO on his company's results. First on Squawk Box tomorrow.
Welcome back. Let's catch you up on a few stories that should be on your radar today. It is time for Rapid Fire. And here to take on the headlines are Dominic Chu, Rahel Solomon, and Robert Frank. Welcome, everybody. First up, and Dom tipped us off to this at the top of the show, the street is extremely bullish on Peloton, the digital fitness company, despite the shares being down 25% since the IPO. More than a dozen firms initiated coverage today with a buy or equivalent rating. You can see them there. Average price target is around $30, which is a 30% rally. Now, Dom, it would be one thing if they said we're bullish because it's done so poorly since the IPO, but most of these calls just seem to reiterate the same things we heard about why the IPO should have been more successful.
Sure. I mean, they talk about the idea that there's a big runway available for companies like this. One of the notes mentioned the idea that they're vertically integrated really well, right? They own the actual hardware, the bikes themselves, they own all the content. The stars have signed away their likeness and their ability to kind of broadcast these online classes. So all of it belongs to Peloton. But a $29 IPO price makes it seem like it was very aggressively priced if the target price that these guys are putting out on average is $30 and change by the time it's done. So, I mean, this is not a call on whether or not Peloton can grow. They obviously can. The issue is whether or not there's a valuation that actually kind of fairly puts them at a level in the market, given what their runway could be.
This is reminding me a little bit of GoPro, where you start out with a very successful hardware company that said it could transition into a sort of media software company, content company, and it didn't. Now, Peloton might, because it is stickier, and its programming is terrific. But one of the analysts said that they would go from it's about 500,000 subscribers now to 3.5 million, which is a huge leap, and that implies a lot of bikes.
Yeah. But they also don't have a ton of competition, so they could do it. I mean, I would like to have a Peloton if I had the room for it in my New York City apartment. I don't.
So we do. Jim Cramer, they use his at his house for like drying clothes.
Clothing rack.
My house, we don't even do that. And it's so heavy. The great thing about Peloton is it's so heavy you can't move it. You can't move it out of your house or also. It's 150 pounds.
So you know what else I would say about it is, and this is again, this is not some kind of a hit job on Peloton with whatever it is. What they do have going for them is that they are trying to diversify the product offering behind just the bikes. Yeah. You've got the treadmills now with those things. You've got the wall mirrors and everything else. So what they're trying to do is innovate on that way. I just don't know how much innovation it takes to get people to really sign on.
And the only other thing you need to know today is the only firm not to initiate with a buy rating was also the only one that wasn't an underwriter. Hat tip to Bespoke for that little nugget.
Are you saying that underwriter?
Am I suggesting?
Oh, no. We would never do that.
Moving right along, it is a big week for Mark Zuckerberg. The CEO of Facebook has been on a media offensive defending the platform amid complaints about its policies and its influence on elections. In an exclusive interview with Lester Holt, he explained it's not about making friends right now.
I get that a lot of people are angry at us. Part of growing up for me has just been realizing that it is more important to be understood than it is to be liked.
Props to him for that kind of statement. But what I think he's really getting at is there has been a lot of backlash about his free speech principles that he laid out last week. People want to see Facebook be more proactive when it comes to policing, especially campaign content. And this is Mark Zuckerberg saying basically no.
But I think it's interesting, right? Because he compared or likened Facebook to the fifth estate, which is like okay, but then to say that they don't have any responsibility policing their content, it's like, well, with much power comes great responsibility.
And to
so you
exactly
can't have it
your
both
point,
ways.
it's going to be up to the regulators then. I mean, this might ultimately be out of their hands. If Zuckerberg wants to say, my position is I want to do it X way, that's fine. But regulators at some point might say, well, we think you're like cable TV instead of broadcast, or whatever the right analogy is, and make the decision for them. It's an open question.
I think it's interesting because you have that great interview, which kind of hit on a lot of things that are facing Mark Zuckerberg as a founder and CEO in Silicon Valley. At the same time, you're seeing kind of these reports come out about, whether or not it was appropriate for Mark Zuckerberg as the CEO and founder of Facebook to be sitting down with conservative pundits and other folks out there on that side of things, and also about whether or not he's kind of like softly advising some Democratic potential candidates for president about what they should be doing with their hiring. So all of this has kind of put him squarely in the political crosshairs. And that's something where you cannot be liked, because eventually half the people at least are not going to like
he understood at least, if that's his goal?
That's my point. I mean, fine, you're not going to be liked. We knew that. But to be understood, I don't know what there is to understand about Facebook that we don't already know. The problem is to convince the rest of the country that you can police yourself and you can do the things that you say you do, which they've proven over and over again. They say they do this, they didn't. They say they would adhere to this, and they didn't.
He's basically trying to say we're almost going to follow the principles of free speech as they are enforced on the government. In other words, the stuff that incites violence, the obvious illegal categories. Is that enough, though, or do people just simply want more of him than he's willing to offer?
Well, look, the power of Facebook in the coming election will only make this much more of a focus.
I know. Let's talk some Amazon, though, shall we? We'll leave Facebook alone for a second, because a new CNBC investigation has found that third-party sellers on Amazon's marketplace are frequently shipping customers expired food. Okay, the details might make your stomach turn. There's been curdled coffee creamer, year-old brownies, and Tivana products that were discontinued back in 2017. 40% of sellers in one case that was tested had 5 or more complaints from users about expired food. Apparently, what's going on here, guys, is that since Amazon opens its platform to third-party sellers, you can go buy expired food at the grocery store, for example, and turn around and sell it on the platform.
So when I heard this story, I thought, well, when you buy something from Amazon, isn't it always buyer beware? And then I realized that I buy my protein powder from Amazon, and then I realized that Robert was the one who told me about the protein powder.
Yeah, but
we both
the great thing about
expired.
What's expired? And does protein powder, like Twinkies, it never does expire. But a lot of it was beef jerky, hot sauce, sugar, like that stuff doesn't really expire. But here's the thing: they talk about all the AI technology that Amazon has to detect these things. All you have to do is get a reader to read the expiration date on the
good luck to them.
How hard could that be?
But they're
to just look at
sellers, right? So how much?
But Amazon could just have a reader.
Sure, I mean you could, but I guess it tells you the shortfalls or what could happen pitfall-wise for not being able to control your entire supply chain.
Absolutely,
right? And that's the whole thing. I would just say this: I've got a growing peeve. It's not a massive one right now about food waste. So I'm not as conscientious. I'm one of those people who believes that expiration dates.
You love expired food.
You can still
wants to buy
you can still go a little beyond there, and it's fine. Just don't throw it away or find somebody who actually.
One more slightly serious note, though. So for companies like Abbott, which make baby formula, the companies themselves are concerned because now you've got people selling their products that may be expired, and they could be on the hook maybe for some issue with that. So now they're themselves trying to police the site.
What do they call it? I believe people call it the gray market, right? Isn't that what it is for like these third-party sellers that aren't actually
or if it's cheese, it gets blue.
Or sometimes green.
Right? Robert, we may need to check our protein powder.
Yeah, that was fine.
Never take shopping advice from Robert Rell. That's
definitely true.
Moral of the story. And finally, a new report from the Wall Street Journal highlights how advertisers are becoming more and more skeptical of online influencers. That's because a lot of them apparently have inflated follower counts. Who knew? And like counts as well. And this, in many cases, can be actual fraud. Influencer deception will reportedly cost advertisers $1.3 billion this year, according to industry estimates. To which I would say, my guess is most people are still getting a lot more value out of using influencers than they are worried about losing that cumulative $1 billion.
That's a fair point.
I would say this. I don't subscribe as much to the influencer side of things, but I will say that targeted ads on social media have been a huge idea generator for me for like holiday gifts.
I discovered I'm a nano, which means I have like less than 5,000.
But I'm a nano too.
But for $100, I could become like Rahel, and she's a micro. She's a micro. She's got 10,000 or more.
Rahel bought all her followers.
I don't think so. She doesn't need it.
Okay, so here is my growing peeve. Influencers who constantly bombard you with ads. So that's the thing. I think for me, and I am a little susceptible to like influencers online. I think it's quality over quantity, right? So for companies watching, you know, if I believe that the influencer actually uses that product, I might buy it.
Except
now,
for protein powder.
Well, protein powder is just off the table now. So that's the thing, though. If I'm constantly being bombarded with sponsored ads, I'm out. I'm completely out.
But the influencer ecosystem has become probably the most important channel through which to launch products and sell things these days. I mean, would anybody argue with that? Even though I realize not the whole population is on social media all the time, but you can tell and this comes up when things blow up too. I mean, look at vaping. They went and realized, oh geez, we paid all of these influencers all this money, and it turns out it was pretty successful, and now maybe we wish it hadn't been so.
And they're realizing that they're expected to spend almost $10 billion over the next year on influencer marketing. So yes, I think people are wising up to it, but there's still a lot of big spend going to that.
It's kind of like the third-party thing with Amazon. Like, you know there's problems, but the core thing to me still seems like it's working. Yeah. But how are you? Are you not an influencer right now?
She is.
No, so actually companies have reached out to me, but as
she's
you know,
on her way to becoming
we're not allowed to promote products. So
help her get to be mid-tier.
No additional streams of income for me.
I've learned a lot. Thank you all, Dominic Chu, Rahel Solomon, and Robert Frank for Rapid Fire today. And it's been a wild 2 weeks for Slack, which is down about 10%. We're going to talk about what happened to the hot IPO of a company proclaiming it would change the way people work forever, and whether this is a warning sign for what's going on with this segment of the IPO market. That's next.
For farmers here, this is our life's work. But when a recall happens, perfectly good food goes to waste. Now we've got a way around that.
Looks good. We're on target.
Blockchain on the IBM cloud helps pinpoint a problem anywhere, from farm to shelf. It's used by some of the biggest retailers everywhere. A nice wedge. So more food ends up on your table.
Is that Daddy's lettuce?
And less food goes to waste.
During your first Inspirato vacation, you'll notice that something is different. The beds are made. The dishes are done. You're not worried about what comes next because it's all been taken care of. The kids are getting along, and your spouse has never seen you so relaxed. Everyone truly important to you is gathered together under one roof, and each moment is a reminder you've arrived. Inspirato, luxury vacation homes and experiences.
It's time to get creative with business cards as unique as you at Vistaprint. Now introducing free shipping on all business cards. Any style, any quantity. Get free shipping on all business cards with promo code TVNOW. Own the now with Vistaprint.
My reputation was trashed online. I felt completely helpless. My entire career and business were in jeopardy. I called Reputation Defender.
Take control of your online reputation. Get your free reputation report card at reputationdefender.com. Find out your online reputation today and let the experts help you repair it.
They were able to restore my good name.
Visit reputationdefender.com or call 1-877-866-8555.
Ted, going on a trip, huh?
Yes.
Taking an off-road station wagon.
You know it's an SUV.
I know for a fact your SUV does not suck.
Why is that?
It ain't got that vacuum in the back.
We gotta go.
Vacuum in the back. Hallelujah.
Welcome back. Even as some high-profile IPOs have flopped this year, like Uber and Lyft, the tech software names have been doing just fine, at least until lately. In the past 2 months, Slack is down 27%, Zoom is down 29%. The tech software category just had its worst week since late August. Is that because of industry-specific problems, or is the air coming out of the whole IPO balloon? Let's bring in Dan Gallagher. He's a tech reporter and writer of Heard on the Street column for the Wall Street Journal. Dan, it's great to see you. And how would you tie this all together for us? What's really going on here?
Well, Kelly, what I'd say is a little bit all of the above, really, because I think these, especially like Zoom and Slack, went out in the market with some pretty high valuations, even though they weren't in this kind of huge unicorn status that Uber and Lyft had. But the stocks went out. They were priced really well, and Zoom especially went really high up for quite a while.
Yeah.
I think we have a combination of just, there's worries about what growth is going to look like in enterprise software later this year, early next year, plus just these valuations were really, really high.
A lot of people, Dan, said while we're all focusing on some of the consumer-oriented IPOs that aren't doing well, the kind of enterprise stuff in the background was. Is that story over now, or are these still considered a success?
Well, I think it depends on what you're going to look at. I think the businesses will still show some pretty strong growth, especially when you're in these small cloud companies. They're not taking up a huge chunk of the IT budget, so there's still a lot of room that they can grow, even if the overall IT spending environment's going to be slowing. There's no reason they can't have some good, strong growth rates next year. But when you combine, some signs of deceleration, plus the fact that, a lot of these stocks were at 20, 30. I mean, Zoom was at above 40 times forward sales.
Wow.
You just can't sustain that, even with really good growth numbers.
And you put your finger on it in your piece the other day where you said, look, this goes back to what Workday, the CEO, said last week. This was last Tuesday afternoon. He said, we're definitely seeing some delays when he was asked about the state of the market. What should the rest of us extrapolate if that's true for this high-flying piece of the market here?
Yeah, well, if Workday is going to say that, you have to keep in mind they're always very careful and conservative with any of their forecasts. So I think when they made that comment, that's what kind of, triggered a lot of selling activity in the sector, and that had already been going on. But that was a particularly bad day because, Workday is usually not a company that makes careless comments. We still don't know if they're going to, if they specifically are going to miss their targets. But when they put out a cautious comment like that, it made people worry. And they're among the largest, pure play SaaS companies. They have their sales usually run really well. So I think if they were seeing that pressure, investors were thinking, well, what are all these other companies going to see as well?
Right. They're not, they're not that recent of an IPO, but what does it say about the ones who are? Dan, I have to leave it there, but there's so much more to discuss, including the direct listing model, which, in Slack and Spotify's case doesn't look so different from the IPO price action. But we'll bring you back. We appreciate your time, sir.
Good to have you. Good
Dan Gallagher is a columnist for Heard on the Street at the Wall Street Journal. Move over tiny homes. There's another big trend in little housing that's on the rise. That's next when the exchange comes right back.
At Angie's List, we help you feel confident about hiring pros for home projects. You can check their ratings, read verified reviews, and easily request multiple quotes. Find all the pros you need to know at angieslist.com.
If you want to know how you could get gold without having to break in here, then listen up. Because thanks to Monex, a trusted name in precious metals investing for over 50 years, you can get free gold. Monex helps you acquire premium gold products to help you diversify your portfolio, whether you're an experienced investor or a novice investor. And for a limited time, new customers who buy at least 20 1-ounce gold coins from Monex will receive a 1/10 ounce gold American Eagle coin for free. Call us now, and you'll receive a free investor kit just for calling that will tell you more about the diversification properties of gold, along with the many other benefits it can provide for investors. Don't pass up your opportunity to get free gold. Call Monex now.
Sunday night, it's a rematch of the first Super Bowl, and it may be a preview of the next. Packers.
Sean, tell us about your upcoming Shaun the Sheep movie.
Oh yeah, that was a good bit.
Really? I never looked at it that way. Wow, you do your own stunts. Wait, that's my line. See Farmageddon, a Shaun the Sheep movie, as part of your year of endless adventures with Meerkat Movies. Oh, spoiler alert. You just gave away the ending. Qualifying purchase required. Tuesdays or Wednesday. Participating cinemas. Standard ticket only. Cheapest ticket free. One membership for 12 months. Conditions apply.
Hey, it's me again, the TV. Since my family gave me Now TV, there's no more endlessly searching for something they want to watch, because now I don't do filler TV, just killer TV. If my family want crime dramas, I've got loads, and they're never going to guess who did it. Dramas, I've got Emmy-winning shows. Ooh, I know, so fancy. Or how about comedy? Coming up, way better than the dad jokes in this house. Now they can watch whatever they're in the mood for.
What's your TV got for you tonight? Now TV. 18 plus, month passes auto-renew, terms apply.
Hey you. Yes, you. We didn't make Nature Valley nut butter biscuits so you could just sit and munch them on the train. Not when there's a whole forest out here to explore. Isn't that right? Go get it!
Delicious whole grain biscuits with a real nut butter filling. Nature Valley Nut Butter Biscuits. Get out more.
We're seeing a big boom in a little type of housing, and we're not talking about tiny homes. We're talking about extra homes on your property. Diana Oleg joins us from Washington to explain. Diana?
Well, Kelly, take a look. No, it is not a she shed, not a super tiny house. It's a backyard bungalow and fast becoming big business for both homeowners and builders alike. As states and cities relax zoning laws, these auxiliary dwelling units, that's ADUs, are cropping up, used for family members or as income properties. And that has meant huge growth for Prefab ADU, which is a Bay Area builder. It installed about 100 ADUs this year, but could expand that to at least 1,500 next year, and they say possibly even 3,000.
Over 80% of our business still remains people who are looking to address housing for family, and 20% is the people who are looking to address options for income.
Rental income was the goal for Lisa and Chris Puhala, who recently built this ADU, which they now rent out on a monthly basis.
We lived in it for 10 months while we renovated our main house, and we loved it. Like, I was kind of sad to move back in our main house. That's how much we loved it.
So you feel like you could retire?
Definitely.
Now, recent changes in zoning laws have really made for huge growth in this area just in the last few years, and the hope is that it'll help alleviate the housing shortage and the lack of affordable housing in big cities like here in D.C. Kelly?
I love it, Diana. They can just retire to the backyard. That's a new concept.
Why not?
But
Easy.
Here's my question, because even when we were renovating the garage, we were worried, okay, is this going to look too much like a dwelling unit? I mean, how many towns really allow you to build another property on your existing one?
A lot, and a growing number, especially out in California. We're seeing it in the Bay Area. We're seeing it in Southern California, and huge growth in ADUs. Here in D.C., it was a recent change to zoning laws. Maryland is now voting on it. There's laws in the House. And actually, you know, the Puhalas talked to their neighbors around here before they did this, and they got their advice. They did not see a lot of opposition to it at all. And in fact, their neighbors came afterwards to look at the house and say, maybe I could do this in my backyard, too.
Yeah, I bet they did. Diana, thank you so much. Diana Olick in Washington for us today. And while ADUs may be the next hot housing trend, new data out of Harvard now suggests the remodeling market is going to stall next year. We're going to speak to the authors behind this study, see what's going on there. That's coming up on Power Lunch. The U.S. economy has been chugging along relatively nicely for the past 10 years. So why are tens of thousands of workers across the country now going on strike? We're going to look at the disconnect next. And be sure to tune in to the closing bell today. Why? Secretary of State Mike Pompeo will join for a CNBC exclusive interview at 4 p.m. Eastern Time. Don't miss it.
So, ServiceNow put your workflows in the cloud, huh?
Mm-hmm.
Your employees must love you.
Thank you. You could say that. So how are things with you guys?
Great.
Thank you. Thank you, sir.
Lunch next week?
Terrific. Say hi to the team.
Will do. Yeah. Call my office.
I will.
Sounds good.
All righty.
ServiceNow works for you.
Hi, my name is Sam Davis, and I'm going to tell you about exciting plans available to anyone with Medicare. Many plans provide broad coverage and still may save you money on monthly premiums and prescription drugs. With Original Medicare, you're covered for hospital stays and doctor office visits, but you have to meet a deductible for each, and then you're still responsible for 20% of the cost. Next, let's look at a Medicare supplement plan. As you can see, they cover the same things as Original Medicare, and they also cover your Medicare deductibles and coinsurance, but they often have higher monthly premiums and no prescription drug coverage. Now, let's take a look at Humana's Medicare Advantage plans. With a Humana Medicare plan, hospital stays, doctor office visits, and Medicare deductibles are covered. And of course, most Humana Medicare Advantage plans include prescription drug coverage. In fact, in 2018, Humana Medicare Advantage prescription drug plan members saved an estimated $7,400 on average on their prescription costs. Most Humana Medicare Advantage plans help you stay active and keep fit by including a Silver Sneakers fitness program at no extra cost. And you may be able to save on dental and vision expenses because coverage is now included with most Humana Medicare Advantage plans. You get all this coverage for as low as a $0 monthly plan premium in many areas. And your doctor and hospital may already be a part of Humana's large network. If you want the facts, call right now for the free decision guide from Humana. There is no obligation, so call the number on your screen right now to see if your doctor is in our network, to find out if you could save on your prescriptions, and to get our free decision guide. Licensed Humana sales agents are standing by, so call now.
I pointed out that dividends only protect the stocks, say consistent companies in this environment. Think utilities, non-retail real estate investment trusts. But for everything else, they're not putting up much of defense, are they? Nobody wants to catch a falling knife, even if it has a notoriously BIG dividend.
Welcome back to The Exchange. Mack truck workers are just the latest in a string of worker strikes we've seen lately, including GM and Chicago teachers. In fact, nearly 500,000 workers in the U.S. took to the picket lines last year. That's the highest level since 1986. All those work stoppages add up to nearly 3,000 days of idleness, and that is at a 15-year high. So why are so many workers walking off the job? For more, I'm joined by Noam Scheiber. He's a reporter for the New York Times. Noam, you answered the question just as I was asking it, and it's great to have you on. What have you discovered about why we're seeing this trend lately?
Thanks for having me. Good to be here. Yeah, historically, we've actually seen a lot more strike activity in periods where unemployment is really low. That was true immediately after World War II through the 60s and into the 70s. What happened after that is there were several decades in which workers went on strike a lot less. And now we're kind of seeing some reversion to the historical pattern. Unemployment's really low. Workers feel like they have some leverage, and so they're using that to negotiate a better deal. The one wrinkle here is versus, those decades after World War II is that I think now workers feel like unemployment is low, they have some leverage, but the economy really hasn't benefited them as much as it has their employer. So there's a little bit of a sense of unfairness that they're also litigating here.
So they want a share. Has there been anything else structurally? You talked about non-competes, for example, that's changed to make it now more likely that workers are pushing back.
Exactly. Yeah, I think in the last few decades, what we've seen is the share of income that companies and employers generate that goes to workers has been gradually declining. I mean, there's some variation from year to year, but the long-term trend has been to decline. Employers seem to have more power to hold down wages through some of those mechanisms that you discussed: non-compete, no poach agreements, just the decline in unionization generally. And so I think there's a sense of frustration that as the economy has rebounded over the past decade from the Great Recession, workers haven't gotten their share, and they're really upset about it.
Are these strikes successful, and how closely do you think people are watching the outcome of the GM one or maybe Mack truck to see what they might do?
Yeah, well, I think the big threshold moment was last year when tens of thousands of teachers in a bunch of red states walked out, and many of them actually did get better deals. So that was a real threshold that we crossed. The deal that GM has put on the table does make a lot of concessions to the workers. There's a change to this so-called two-tier wage structure that GM imposed when it was on its deathbed about a decade ago. The company has said they're going to shorten the kind of in progression time that it takes new workers to get to the veteran pay from 8 years to 4 years and then phase it out altogether.
Right.
So there are some victories. The workers are very upset that 3 of the 4 plants that GM idled earlier this year, it doesn't look like the company is going to bring them back online. So that's a real sticking point, and that may be the toughest part of the UAW having to sell this deal to its members at this point.
Noam, it's great information. Thank you so much for joining me.
Thanks for having me. Good to be here.
Noam Scheiber of the New York Times. That does it for The Exchange today. Power Lunch starts right now.
Kelly, thank you very much, and we'll see you over here in just a moment. I'm Tyler Matheson. Welcome, everyone, and here is what's new at 2 on Power Lunch for a Monday. We are heading into the heart of earnings season, and so far, so good. We will tell you which names could take the market to new highs. Plus, Boeing in turmoil New fallout over the safety of its 737 MAX, and Wall Street now split on what's going to happen next. Two analysts will battle it out. And the NBA getting ready for tip-off this week under a cloud of controversy in China. Insider Shams Charania will be here later this hour to explain it all as Power Lunch begins right now.
And welcome to Power Lunch. I'm Melissa Lee. Stocks are modestly higher across the board today. The S&P 500 hovering just above that key 3,000 level, about 1% away from record highs here. And check out shares of Boeing. That's the biggest drag on the Dow. As Tyler had mentioned, some analysts on Wall Street turning their backs on the embattled plane maker. That stock down more than 12% in just 2 days. We'll have much more on this story later on. Kelly.
All right, Melissa, thanks. We begin with comments from the president at a cabinet meeting earlier today, hitting on a range of topics, including the latest on trade negotiations with China. Eamon Javers is at the White House with more. Eamon?
Yeah, Kelly, the president was putting an optimistic spin on where things are going in terms of China. He also put an optimistic spin on the USMCA, that trade deal. He wants Democrats up on Capitol Hill to pass it. He said he calls them the do-nothing Democrats, but if they actually pass this one, he'll give them all the political credit if they do that. So the president continuing to lobby there. On China, what the president said was that they're suffering economically. They're ultimately, their supply chains, he said, are going down the tubes. And Robert Lighthizer spoke in this cabinet meeting to say ultimately that he feels that they're going to get toward a phase one deal, but not until the president and Xi Jinping meet at the APEC summit in Chile later this year. So he said there's still some issues to be worked out here. The president, though, continuing to suggest that things are going well there and saying that ultimately he sees the phase two issues as being easier to deal with in some ways than what's in this phase one piece that they're wrapping up right now. We'll see if that ends up being the case, though, Kelly, because there's a long way to go between here and there by the time they get phase one settled and then start in on the next round.
All right, Eamon, appreciate it. Eamon Javers at the White House.
Well, we are kicking off what will be the two busiest weeks of earnings season as markets approach record highs. Seema Modi's at the New York Stock Exchange with the latest. Hey, Seema.
Hi, Melissa. Well, with those trade negotiations ongoing, the question is whether earnings can get us to new highs. We're less than 1% away. The S&P 500 above 3,000. If we can close there, that would be the first time in 1 month. The Dow would be above 27,000 if it wasn't for Boeing. Boeing accounting for 80% of the losses. But there is strength in financials. We're looking at JP Morgan shares trading at a new 52-week high. Apple at a record high after getting upgraded at Raymond James this week. 122 S&P 500 companies reporting earnings. We have 12 Dow components, and results will shed light on whether these multinationals with that global exposure are able to account for some of the growing risks, like a stronger dollar, tariffs eating into costs, as well as the recent slowdown in U.S. manufacturing. I'll be watching the industrials closely. It's worth noting that profit estimates have come down from 6% back in July to just 0.9% for the major industrials. We have United Tech, Caterpillar, and 3M all reporting this week. And if you look at a longer-term chart, you'll see that they've underperformed the broader market, with shares of 3M down 25% in the past 6 months. So keep a close eye on those names. Finally, best performing stock on the S&P 500 right now is Coty. The company saying that it is exploring a sale of its professional beauty service as part of its broader turnaround strategy. That stock up 13.6%. Finally, some of the trade-sensitive groups like technology and chips moving higher right now. Guys, sending it back to you.
All right, Seema, thank you. We've got some breaking news sending Teva shares sharply higher. Dom Chu's got all the details. Dom.
All right, so Melissa, what we're watching right now are shares of Teva Pharmaceuticals up right near the session highs, up about 11+% at this stage. The reason why, because all these drug companies had been higher on the day after the news of that settlement for that opioid litigation in Ohio. Well, Teva has just announced that they are in a framework right now for a wider ranging settlement, including agreements in principle with the attorneys general of North Carolina, Pennsylvania, Tennessee, and Texas, as well as certain defendants for a possible global settlement framework. It would include, among other things, guys, around $23 billion worth of drugs and medication provided to help remedy the opioid addiction crisis, as well as a cash payment of up to $250 million over the course of a decade. That particular news is helping to send shares of not just Teva, but also drug distributors like McKesson, also what's happening with Cardinal Health, others like that to their highs of the day as well. So we'll keep a close eye on this, but for right now, that's the reason why, Tyler, you are seeing such sharp moves higher on some of these drug distributors. I'll send things back over to you.
All right, Tom, thank you very much. And meantime, in a note to clients, Goldman Sachs cautions that buybacks are plummeting. So if buybacks are drying up, will earnings be enough to push stocks to new highs? Let's talk about that and more with Brad McMillan, Chief Investment Officer with Commonwealth Financial Network, and Jamie Cox, who's a managing partner with Harris Financial Group. Brad, let me begin with you. We'll get to the question of the buybacks in just a minute. They have been a bit of steroids in the cocktail for several years, of course. But your view right now is that the economy is slowing but still growing. Is that going to be good enough to take the markets to new highs? And how should I invest in that slower growth environment?
I think it is going to be good enough to take markets to new highs, because what you have to look at is, even with all of the bad news out there, we're seeing corporate revenues grow substantially faster than the economy. And that reflects the fact that people are working. You talked at the end of the last show about how we're seeing strikes because the labor market is so strong. Those people are making money, and those people are spending. And that's going to keep driving revenues, and earnings are probably going to beat expectations as well.
So, Jamie, why don't you chime in here? What do you think is the sort of overarching theme of the next year or so, and how should you position or reposition your portfolio to catch the wind?
Well, I think you can call me a value bull. I think we're in the part of the cycle, Tyler, where it makes a lot of sense for investors to reorient their portfolios to things with much more sustainability. I mean, we're looking at a corporate debt situation that could really spiral out of control. I think that if you look at companies like Daimler and compare them to Ford, you have a situation brewing where companies have really overborrowed and had used that money to fund buybacks and dividends and things like that, which has produced a situation where companies have been spending way more than their free cash flow. So to me, I think investors need to pay close attention to the stocks they own, to try to figure out the ones that have the ability to cover those interest payments, continue those dividends, and actually be sustainable in the future. One of the examples, Daimler, Procter & Gamble, and even something like Nestle would be good three examples for investors to consider. I don't think the U.S. economy is going into recession in the next year or so. I think that's going to be fine. I agree that the economy is pretty stable, but I do believe that stocks in the U.S. are becoming very stretched, and it's actually going to be easier for investors to own these more value-oriented names. Do it now before it's too late.
I totally understand that sentiment, Jamie, but at the same time, in that table where you had mentioned Daimler, Nestle, as well as Procter & Gamble, you also have the example of ExxonMobil. ExxonMobil has about a 5% dividend yield, but it's down 16% over the past 12 months. So you're in a case where dividend yield is not making up for the loss in principal that you're suffering as an investor.
Agreed. I 100% agree with that, but we're looking to the future, not the past. And if you're looking at a good time to buy a company like ExxonMobil, this would be a good opportunity to do so. I believe that when you're talking about owning the shares and looking at the companies in general, the ability for them to sustain that cash flow or sustain the dividend payments is really, really important now. So I as an investor, I take the other side and say 2 years from now, 3 years from now, I'll be glad to be an ExxonMobil investor as opposed to perhaps one of the other companies like Valero or something like that, where they may be in a debt situation where they have to cut those things back if debt service becomes a problem. So I believe that the debt service ratios and things like that are more favorable, and for a longer term or even a couple of years from now, that's going to be a better place to be.
Let's talk, Brad, a little bit about buybacks. And are you one who believes that they are drying up? And if they are, will that lack of sort of tinder affect the market more broadly? I'm not talking about the dating site. Okay.
No, I think what you're seeing here is we might see buybacks pull back a little bit, but there's two things you need to remember there. First of all, we saw buybacks increase from about $800 billion last year to about $900 billion this year. So they can pull back a very considerable amount and still be at a very healthy level. The second point is this. We're talking about generally new announcements of buyback programs. A lot of the announcements that have already taken place still have some room to run. So we're not talking about a cliff, first of all. We're talking about maybe a slowdown over time. Second of all, we're talking about still a very high level of buybacks. And because of that, I don't think that's going to be the thing that takes the market down.
Okay.
There's a lot of headwinds, but that's not going to be it.
All right, gentlemen, we leave it there. Brad McMillan, Jamie Cox, we thank you for your time today.
Thank you, Tyler.
And coming up, the NBA season is kicking off, and the league is facing a bunch of issues, not just the China controversy. We will get you set for tip-off. Plus, Boeing is weighing on the Dow. Several analysts now turning negative. We'll hear from one who says now is the time to buy. Coming up.
This CNBC program is sponsored by PIMCO.
The S&P 500, the benchmark for most U.S. equity investors. Only sector SPDR ETFs can divide the S&P 500 into 11 investable pieces. This allows you to underweight and also overweight sectors to best meet your clients' objectives. Sector SPDRs, write your next chapter in investing. Before investing, consider the fund's investment objectives, risks, charges, and expenses. Go to sectorspiders.com for a prospectus containing this information. Read it carefully.
How can I deliver superior long-term results? It begins with a distinctive approach to managing money that for over 85 years has focused on keeping confidence up when markets are down. An approach where portfolio managers work well independently and even better together, who don't just invest, but are personally invested. Can I find a proven approach designed to deliver results? With Capital Group, I can. Talk to your advisor or consultant for investment risks and information.
Are you ready to have some fun? This may be one of the funnest seasons that I've ever done. For me, you're shooting for the moon. Business is personal.
The Profit season premiere, Tuesday, November 5th. CNBC. Get yours.
Sean, tell us about your upcoming Shaun the Sheep movie.
Oh yeah, that was a good bit.
Really? I never looked at it that way. Wow, you do your own stunts. Wait, that's my line. See Farmageddon, a Shaun the Sheep movie, as part of your year of endless adventures with Meerkat Movies. Oh, spoiler alert. You just gave away the ending.
Qualifying purchase required. Tuesdays or Wednesday. Participating cinemas. Standard ticket only. Cheapest ticket free. One membership for 12 months. Conditions apply.
Carl's All Change Casserole.
So, Chloe walks in from school. Tears all over her face.
Daddy,
She says,
I don't want to eat animals anymore.
I blooming love my meat. But not as much as I love my little girl. That's why we've made some changes to our old favourite, sausage casserole. Now with meat-free Cumberlands, but still with my magic touch. A dollop of mango chutney. Just as tasty as it used to be.
Better actually.
Make your own with the new Tesco Plant Chef range. Food Love Stories. Brought to you by Tesco.
Welcome back. Boeing is falling today again as Wall Street is now turning its back on the stock. In fact, the stock is down 12% now in just 2 days. Let's get to Phil LeBeau for the latest news on Boeing. Phil?
Kelly, this is what happens when you have three analysts downgrade a stock and one of them dropping the price target by more than $100. Some of the statements, well, they're pretty clear on why they have downgraded them. Let's start first off with Baird, which is dropping Boeing down a notch, saying long road back just got harder, moving to sidelines on TextGate. UBS also downgrading Boeing, saying we think a push out of the return to service could increase the likelihood of a pause on the 737 MAX production system. And finally, Credit Suisse also downgrading Boeing, saying we can no longer defend the shares in light of the latest discoveries which significantly increase the risk profile for investors. If you take a look at shares of Boeing, we should point out that all of this started on Friday with the release of instant messages as well as emails from a former technical pilot at Boeing suggesting that he may have misled regulators. Boeing says that's not the case. One other stock we want to point out, guys, and it's Spirit Aerosystems. This is the company based in Wichita, Kansas, makes the fuselage for the 737 MAX. It also is taking a hit today, was downgraded. Big concern here is that we could see a drop in production at some point over the next month or two.
All right, Phil, thank you. Phil LeBeau. For more on what this means for Boeing stock, let's bring in our panel, Jeffrey Sheila Kayaglu. She says to buy the dip, but Carter Copeland from Melius Research thinks you should stay away during this volatility. Thanks to you both for being here. Carter, I'm going to start off with you. You got a buy rating. You've got a $500 price target, and yet you say the volatility near term is going to be enough to stay away. What makes you think that even after this bout of volatility, once Muhlenberg goes to the hill, et cetera, that the stock is going to gain $170 from where we are right now?
Yeah, so it's a 2-year price target, just to be clear.
Okay.
But in general, what matters to us and for any stock in the market is, what does the future look like, not what does, instant messages from 3 years ago tell us about the past. So our view has been and continues to be that there will be a return to normalcy at some point with the 737. And I think Phil highlighted the key question, which is near-term production and whether or not that moves around. But we do think, the quarterly earnings have been very volatile for the stock. Obviously, a congressional testimony is going to be an absolute feeding frenzy for headlines. So look, we expect continued volatility, and I've told folks this isn't an easy buy the dip opportunity, but we do think that there's substantial value and upside from here.
Sheila, you do say to buy the dip right now, and I'm wondering, Sheila, what makes you think that this is the dip to buy? I mean, we've been sort of strung along in this whole Boeing saga to believe that things will resolve itself sooner rather than later, and yet the timeline keeps getting pushed out. Negative headlines keep going forward. Muhlenberg has been sort of pushed aside a little bit. What makes you think that now is the time?
Sure. I mean, we are bullish. We like when people capitulate on a stock, and that's 3 downgrades in one day. I think, with the stock at $330, you're basically embedding free cash flow of $23 per share at 7% yield. That's almost cutting our 737 MAX margins in half. We know the next hand Boeing has is probably a negative one, whether it's a rate cut on the 787, whether it's further delays on the MAX. We can see that's coming, but we think that's being priced in by almost having where our current MAX gross margins are today.
Carter, do you think that Muhlenberg stays as CEO, or does he get pushed out?
At this point, there's a lot of political influence on that. So I think it's a tough question to answer, frankly. I mean, I think everyone thought when the initial news hit around lunchtime on Friday that it was destined that Muhlenberg was going to lose his job. And I think as context emerged around some of those messages and what had been shared and how they hadn't been hidden from some areas of government and they just hadn't made it to other areas of the regulatory regime, I think that became a much more difficult calculus. And so I think that's where we find ourselves today. I don't think it does any good to do a leadership change while they're trying to get the airplane back in the air. And so I think the board would be reluctant to move too soon, too fast. But, ultimately, I think political pressures could play a big role in that.
Yeah, you've got political pressures, and you've got outside activists calling for the upheaval or overthrowing not just of the CEO but of the entire board. Sheila, Boeing is an interesting company in that it really is part of a at least as far as commercial airliners go, a duopoly with Airbus. But the one thing you can say that distinguishes Boeing from its competitor is that it has to have been financially dented by what's going on here. There may be orders that will be lost. There's going to be litigation, and they're going to have to pay carriers for the losses that they have suffered. And there may be large fines. How do you factor this all into your outlook?
I think people forget that Airbus had a management change themselves about a year ago, and they struggled. So I think that the current share price, I'll go back to it, going back to the financials, is pricing in another concession into what the MAX margins look like. So I'm pretty confident 2 years from now we'll see a different picture and this turbulent time will be behind us. But for now, you might have 1 or 2 more pieces of bad news.
Carter, you also have this, your colleagues at Credit Suisse have downgraded the stock today to neutral, calling it a downward spiral. I mean, they're talking about return to service being delayed, public confidence taking a hit, labor productivity being a future problem, and legal risk. Do you think none of those issues are going to be as serious as they seem to?
Look, I think we think all those things are real. I'm sure it's tough to be an engineer and go to work at Boeing every day. It's probably tough to go to dinner parties on Friday night and have people ask you questions about whether or not your airplanes are safe. I think all of that stuff is real. I think where we are at this calendar point in the year for a large cap stock to say, can I stand by it here and defend it here? It's tough. And the catalyst path is a tough one. But I think at the end of the day, you've got to ask yourself, what does normal look like when you get beyond this into a recovery? And I think there won't be a material impact on production rates in this duopoly and profit rates. There will be significant costs that are incurred over the course of the next, let's call it 12, 18 months. But then once you get beyond there, you're going to get back to a well-functioning duopoly that's in a secular growth market. And that ultimately is where we will settle out. And I think that implies share prices that are much higher than that, than where we are today.
I mean, getting back to recovery is the key point there, Carter. And that road to recovery may be a long one. I'm just wondering, is there a parallel in history, whether it be in the aerospace industry or elsewhere, that you think is comparable to what Boeing is going through right now, where a company is facing some sort of existential risk to its business, challenges to its culture, and whether or not culture bred sort of malfeasance, and a CEO that could be in the hot seat at this point? I mean, what comes to mind for me is in another industry, and that would be Wells Fargo. And so far, that scandal has been going on for 3 years, and the stock has underperformed and not really done much.
Yeah, but they're not competing in a duopoly where there's, other places, there's nowhere else to go, right? And you've got a company with a 100-year history here of making safe airplanes. And outside of these two MAX accidents, you've got, a pretty stellar track record for the 737. And so you think, what is the level of support that Boeing is going to have out in the field when this plane goes back to service? I would venture a guess that it will be more extensive than anything in the history of human flight. So I'd tell you that the plane's probably going to be incredibly safe. And in a duopoly where you're not facing a lot of competition, it's somewhat easy to begin to make those recoveries over time. Now, that may require a change in leadership. But, I think ultimately we'll get back to where we started before this crisis happened.
It's good to be in a duopoly. Sheila, Carter, thank you.
All right, two big name Dow stocks hitting record highs today. We will get the traders' take on Apple and get a closer look at the housing trend that has been boosting Home Depot. Is it, though, perhaps near its end? Power Lunch will be right back.
There's golf. Teaching shapes lives. Becoming a teacher means a career of opportunities. You could head a subject department or work towards school leadership. And with a minimum starting salary of £24,000 to £30,000, teaching has never been so rewarding. Teaching. Every lesson shapes a life. Search Get Into Teaching. Starting salary dependent on location.
Should we go halves? I'll get this. Let me just get my card. Which was in my pocket.
You can't control awkward first dates. But if you temporarily misplace your debit card, you can freeze and unfreeze it on our mobile banking app. Feel in control every day. Lloyds Bank. By your side. You can only freeze some transaction types. T's and C's apply.
And to say happy birthday, we're giving you a pair of award-winning Silver Galaxy Buds.
But it's not my birthday till June.
No, but it's ours. 10 years ago, we launched our first Galaxy smartphone. And to celebrate, we're giving customers who purchase any Galaxy S10, Note 10 or A90 5G the chance to claim a pair of amazing wireless Galaxy Buds.
Wow, and I didn't get you anything.
Get the latest Samsung Galaxy smartphone now at your local Carphone Warehouse shop or carphonewarehouse.com. Offer available on purchases made by the 23rd of October 2019 and claimed online within 30 days. T&C supply.
Chase the sun with TUI to over 40 long-haul destinations. Explore the beautiful beaches of Jamaica, sip margaritas in Mexico, or see the many wonders of Asia. And until the 26th of October, enjoy £150 off per booking. When you fly with us, we'll take you there on one of our state-of-the-art Dreamliner planes. TUI, we cross the T's, dot the I's, and put you in the middle. T's and C's apply. Minimum spend £1,200 and available on selected holidays. See website for details at All Protected.
Hey, it's me again, the TV. Since my family gave me Now TV, there's no more endlessly searching for something they want to watch, because now I don't do filler TV, just killer TV. If my family want crime dramas, I've got loads, and they're never going to guess who did it. Football? How about the Premier League? Or how about thrillers? They're going to be on the edge of their seats with these. Now they can watch whatever they're in the mood for.
What's your TV got for you tonight? Now TV. 18 plus, month passes auto renew, terms apply.
Head to TradePoint to see the new kitchen ranges. The quality's gone up while delivery times have gone down, with up to 6 ranges stocked in store too. And the low prices, well, they're still low. Plus, they're even easier to install. For all you need, when you need it. Get to TradePoint or go to tradepoint.co.uk.
Welcome back to Power Lunch. I'm Mike Santoli at the New York Stock Exchange. Apple hitting fresh records after Raymond James upped its share price target to $280. That is the most bullish on the street. Analysts saying higher sales for the iPhone 11 will drive further upside in the stock. Craig Johnson of Piper Jaffray and Mark Tepper of Strategic Wealth Partners are your Trading Nation team today. Craig, big stock at an all-time high. That's, pretty upbeat commentary right there in itself. I guess the only question is, if you look at the chart, is it getting stretched at all, or does the trend seem okay?
Mike, I think the trend looks great. The stock has just broken out to all-time new highs. And in fact, when you look at the size of the consolidation it just broke out of and you do a measurement on it, you can certainly argue for a price objective that purely based upon the charts, north of $300. So I'd still be a buyer of Apple in here, Mike.
All right, and Mark, it's interesting because not all that much has changed since January with the actual business of Apple, but in early January you had that panic over China iPhone sales and all the rest of it. Do you think right now people are looking too much on the bright side yet, or you still think that the long-term story is intact?
Yes, so we own Apple, and you almost have to own it because it's about 3.5% of the S&P 500, but we have recently taken some profits. Now, this call was really all about the iPhone 11. They're phasing out some older models, so the average selling price is going to go up. Production's been higher than expected. But what the call doesn't really mention are some of the things that interest us when it comes to Apple. So for the first time in a long time, the iPhone now makes up less than 50% of Apple's revenues. Why is that important? Because they're in the process of becoming less reliant on just one product. They're diversifying their business. That's good for companies and good for multiples. Wearables are doing really well. Services are up 13% year over year, and they're shifting towards more recurring revenues. So wearables and services are now about 1/3 of their revenues. Love the company. We're going to continue to own the stock, but I do believe most of the easy money has already been made.
All right. Well, it's interesting. I mean, we mentioned 280 is now the highest price target on the street. That's only 16% upside. It's unusual for a marquee stock not to have any more bullish analysts than that. We'll see what that says about the overall sentiment, guys. Craig and Mark, thank you very much. And for more Trading Nation, head to our website or follow us on Twitter at Trading Nation. Melissa, back over to you.
All right, Mike, thank you. Ahead on Power Lunch, home improvement stocks have had a constructive year, but a new study says spending on repairs could hit a wall in 2020. What this means for the housing market next. Plus, more than half of the S&P 500 stocks are yielding dividends higher than the U.S. 10-year bond. We'll take you diving for dividends. And the NBA season tips off tomorrow night. Will the lingering fallout with China dampen the big event? We'll sit down with a top NBA insider. All of this when Power Lunch returns.
And now, the latest from tradingnation.cnbc.com and a word from our sponsor.
Generally speaking, a strong dollar is good for the economy, but that doesn't mean that all companies are going to benefit equally. In fact, companies that do a lot of business abroad and those that are in manufacturing tend to be more vulnerable to a strong dollar. So if you believe that the dollar is going higher, you might want to check your exposure to these types of companies. I'm Joanna Payne, and Schwab is the better place for traders.
So Schwab, tell me about...
Hearing is an underrated miracle. Intimate whispers, the lushness of symphonies, the soothing patter of rain on leaves. If you had that taken away from you, it would be a massive loss for most of us. Almost all of us go every day without really stopping to think about just how important it is to us.
Audible presents The Body, a guide for occupants, written and read by Bill Bryson, including original bonus material exclusively available at Audible. Listen free as part of your 30-day trial, $7.99 a month after 30 days. Renews automatically.
Did you get the milk?
I bought brie, fish fingers, and washing up liquid.
You went out for milk.
I won't be long.
You can't always control what you spend, but you can save as you spend with Save the Change. When you use your Lloyds Bank debit card, we'll round up the amount to the next pound and transfer the difference to your nominated Lloyds Bank savings account. Feel in control every day with our mobile banking app. Lloyds Bank, by your side. T's and C's apply.
This autumn, as the nights draw in, beat the cold with Now TV. Curl up with the latest blockbusters, including Bohemian Rhapsody and Hotel Mumbai. Plus, with over 40 new movies added each month,
From Aquaman to How to Train Your Dragon 3, Now TV's got you covered, wherever you feel like watching. Get cozy with the latest and best movies for just $11.99 a month. Search Now TV today. 18 plus month passes auto renews unless cancelled. Terms apply.
Carl's All Change Casserole.
So, Chloe walks in from school. Tears all over her face.
Daddy,
She says,
I don't want to eat animals anymore.
I blooming love my meat. But not as much as I love my little girl. That's why we've made some changes to our old favourite, sausage casserole. Now with meat-free Cumberlands, but still with my magic touch, a dollop of mango chutney. Just as tasty as it used to be.
Better, actually.
Make your own with the new Tesco Plant Chef range, Food Love Stories, brought to you by Tesco.
It's going to be a bit chilly today. And with the worst of winter yet to reach London, you don't want to wake up to a broken boiler. We're with you. So that's why with British Gas Home Care, we've got your boiler covered 365 days a year. We have thousands of engineers on hand to help get your boiler up and running again, and all from just 46p a day. Buy selected home care products online by the 28th of October and get 1 month free. Search British Gas Home Care. Conditions apply. Prices vary by postcode.
And to say happy birthday, we're giving you a pair of award-winning Silver Galaxy Buds.
But it's not my birthday till June.
No, but it's ours. 10 years ago, we launched our first Galaxy smartphone. And to celebrate, we're giving customers who purchase any Galaxy S10, Note 10 or A95G the chance to claim a pair of amazing wireless Galaxy Buds.
Wow, and I didn't get you anything.
Get the latest Samsung Galaxy smartphone now at your local EE shop or ee.co.uk. Offer available on purchases made by the 23rd of October 2019 and claimed online within 30 days. T&Cs apply.
Welcome back, everybody. I'm Sue Herrera. Here's your CNBC News update at this hour. Dallas officials say they are grateful that no one was hurt or killed in last night's powerful storm, but they are assessing the damage across the city. A tornado was believed to have hit part of that region.
Considering the path that the storm took, went across a pretty densely populated part of our city, I think we should consider ourselves very fortunate that we did not lose any lives, no fatalities, and no serious injuries in last night's storm. So I think we should all be very grateful for that.
A 3-alarm fire tore through a West Philadelphia auto body shop this morning, sending smoke and flames into the air and forcing the evacuation of hundreds of students from a nearby high school. Dozens of firefighters pouring water onto surrounding properties in an attempt to prevent that fire from spreading. Nearly 65,000 pounds of ground beef sold under several different brands, including Circle A and Clark's, have been recalled. This due to E. coli concerns. The beef primarily sold to restaurants in 12 to 60-pound cases. You are up to date. That's the news update this hour. Kelly, back to you.
All right, Sue, thank you very much. And let's check on markets right now. The Dow has been held back all day by Boeing, which is having a rough session, as we discussed. It's up about 46 points right now, though, so it's moved a little bit higher of late. The Nasdaq is the outperformer. Well, actually, the Russell is. Look at the Russell 2000, the small caps up 1%, the Nasdaq up 0.8%, the S&P up 0.2%, sitting at 3,005.
And time for today's Power Movers. We start off with Teva surging on the news coming just this hour that the pharmaceutical company reached a global settlement resolving the more than 2,000 suits alleging that it helped fuel the opioid crisis. That stock up more than 12%. Next, another drug company, Seattle Genetics, stock soaring to a new high on positive trial results for its breast cancer treatment, up 16%. And shares a Coty higher as the company says it is exploring a possible sale of its professional beauty business, which includes hair brands like Clairol. Last but not least, Infosys, the Indian IT company, down big to the tune of 13%. The company says it received an anonymous whistleblower complaint alleging unethical practices. India's Economic Times reporting the company is being accused of using unethical means to boost short-term earnings.
Transitioning to oil, the market is closing there for the day, and Contessa Brewer has the numbers at the commodity desk. Hi, Contessa.
Hi, Tyler. Oil lost some ground today. WTI is down 0.90% here, and you've got Brent off by 0.84%. Even though fears about a no-deal Brexit have eased, worries about a slowing global economy and the concerns here about demand continue to weigh on the oil market. If you look right now at natural gas, down 3.3%. We got news from Russia yesterday saying it did not meet its September reduction commitment because of an increase in natural gas output ahead of winter. And OPEC members Kuwait and Saudi Arabia are in talks to resume oil production. That could add 500,000 barrels per day, so you got a lot of supply and worries about how much demand you have, Kelly.
All right, Contessa, thank you. Home improvement stocks are soaring. Home Depot hitting an all-time high today, while Masco and Whirlpool are at 52-week highs. And the housing trade has been hot all year. Lowe's, Home Depot, Sherwin-Williams, Masco, and Whirlpool all posting double-digit gains and outperforming the S&P. But Harvard University's Joint Center for Housing Studies says its indicator shows the remodeling market stalling in 2020. Let's bring in Abby Will. She's Associate Project Director at Harvard's Joint Center for Housing Studies. Abby, welcome, and why the slowdown?
Thanks. Yeah, our short-term indicator, it's showing that remodeling spending, homeowner improvements, maintenance and repairs is expected to decline just 1/3% into the next quarter, into the third quarter of next year. And so, what we're looking at is the ongoing weakness that we've seen in home building, in home sales, in home prices. All of that we think will be contributing to the stalling that we're expecting next year.
So we've seen a little bit of a pickup, a rebound in the data the last couple of months. If that's sustained, could remodeling do better? And what is the dynamic between people moving and remodeling versus staying in their existing house and remodeling? Which of those two forces is usually stronger?
Yeah, absolutely. I mean, we do absolutely think that there could be some room here for sustaining the growth that we have been seeing in the home remodeling market, which has been healthy or strong over the last several years now, almost the last decade. We've seen above average growth in home remodeling spending, and we're looking at home sales as a factor for remodeling, in that a lot of remodeling does tend to happen around the time of the sale. So the seller is doing work perhaps to update some things before they put the home on the market. And then new buyers, recent buyers, do tend to spend quite a bit more on home improvements in the first few years after purchase as they're making that home really fit their needs. Mobility rates have been going down, and certainly that's a double-edged sword because of the sales factor for remodeling. But if you're looking to stay in your home for a little bit longer than maybe you previously thought, the calculus changes for the types of remodeling projects and how much.
Did I hear you say slowing by 1/3%? Is that what I heard?
That's right. Through the third quarter of next year, we expect annual spending to decline just by 1/3%. So basically, we are looking at a flat market for the coming year.
But that's really a very minor slowdown, isn't it? I mean,
absolutely. This, I think we'll see in the next few quarters whether this projection really is the beginnings of a more protracted turndown in the remodeling industry or not. This might just be a hiccup. And certainly, we're looking at some headwinds against the growth in the market, but some tailwinds too. So mortgage interest rates, for example, we're in a very low mortgage interest rate environment. And certainly for homeowners who are looking to do projects, who have home equity built up in their home, if they're looking to finance that project with a home equity loan or line of credit, the environment today is pretty attractive for that.
What kind of remodeling or what kind of remodeling projects, Abby, get turned off first in the beginning of this sort of downturn, or what could be a downturn?
Right. So it's really the discretionary projects, the major kitchen and bath remodels, the room additions. Those are the types of projects that really fueled the last boom in remodeling a decade ago. And those are the projects that quickly disappeared during the downturn. And so, right, we expect that homeowners are starting to hesitate. They're starting to think twice about some of the projects that they, don't have to do, that they can put off for a little bit. And if they are doing those projects, I think they're also hesitating on project size, that they might just not be spending as much as they would have otherwise.
Abby, thanks. Good to see you. Appreciate it. We'll see what happens.
Thank you.
Abby will.
Coming up on the tasting menu, Peloton riding high, Netflix selling bonds, and Dunkin' demanding more meatless. Stay with us.
Will
cancer affect my sex life?
Your sex drive can disappear. The side effects may stop you.
Sex life can easily stay.
When you search one question about cancer, you end up with millions of results which contradict each other. For clear and uncomplicated information, come to Cancer Research UK. Visit us online or give us a call on 0808 800 40 40. Cancer Research UK. Together, we will beat cancer.
Head to TradePoint to see the new kitchen ranges. The quality's gone up while delivery times have gone down, with up to 6 ranges stocked in-store too. And the low prices, well, they're still low. Plus, they're even easier to install. For all you need, when you need it. Get to TradePoint or go to tradepoint.co.uk.
Hey, it's me again, the TV. Since my family gave me Now TV, there's no more endlessly searching for something they want to watch, because now I don't do filler TV, just killer TV. If my family want movies, I've got blockbusters. Football? How about the Premier League? Or how about dramas? I've got Emmy-winning shows. Oh, I know, so fancy. Now they can watch whatever they're in the mood for.
What's your TV got for you tonight? Now TV. 18 plus, month passes auto-renew, terms apply.
It's going to be a bit chilly today. And with the worst of winter yet to reach London, you don't want to wake up to a broken boiler. We're with you. So that's why with British Gas Home Care, we've got your boiler covered 365 days a year. We have thousands of engineers on hand to help get your boiler up and running again, and all from just 46p a day. Buy selected home care products online by the 28th of October and get 1 month free. Search British Gas Home Care. Conditions apply. Prices vary by postcode.
Sean, tell us about your upcoming Shaun the Sheep movie.
Oh yeah, that was a good bit.
Really? I never looked at it that way. Wow, you do your own stunts. Wait, that's my line. See Farmageddon, a Shaun the Sheep movie, as part of your year of endless adventures with Meerkat Movies. Oh, spoiler alert. You just gave away the ending.
Qualifying purchase required. Tuesdays or Wednesday. Participating cinemas. Standard ticket only. Cheapest ticket free. One membership for 12 months. Conditions apply.
Chase the sun with TUI to over 40 long-haul destinations. Explore the beautiful beaches of Jamaica. Sip margaritas in Mexico. Or see the many wonders of Asia. And until the 26th of October, enjoy £150 off per booking. When you fly with us, we'll take you there on one of our state-of-the-art Dreamliner planes. TUI, we cross the T's, dot the I's, and put you in the middle. T's and C's apply. Minimum spend £1,200 and available on selected holidays. See website for details. Atoll protected.
Welcome back. Here's a taste of some of the other stories we are watching today. Peloton could be shifting into high gear, according to basically all of Wall Street. JP Morgan, Cowen, and about a dozen other firms initiated the recent IPO with buy ratings, saying it's well positioned to disrupt the fitness industry. But skeptics remain, like MKM Partners, the only firm that wasn't an underwriter and happens to initiate the coverage with a hold on the stock. Despite all the love, Peloton shares down again today, now by 4.5%. The company is one of the worst performing IPOs of the year. It's down about a quarter in terms of its value since it went public.
Wow, a quarter of its value. These things are very popular. I find more and more people buying them.
The bikes? I love the Peloton bike. I use it every week. Yeah, definitely. The thing about this, though, obviously, is everybody knows how Wall Street works, but to see it in plain sight like this, where one firm
didn't get a piece of the action.
Doesn't have a buy rating on the stock, is not involved in the underwriting of the stock. Makes
and
you go,
sure enough,
exactly.
All right, Netflix planning to shell out more bonds. The company announced today that it wants to offer about $2 billion in bonds. Netflix has been gearing up for some heavy competition from Apple and Disney with the release of their own streaming services. The bonds will help finance Netflix's production deals and acquisitions. It's been a rocky few months for the streaming giant. Shares have slipped around 12%. First time in a long time we've seen that kind of performance out of that stock. Of course, it all depends on when you buy and sell, not what you buy.
But this is super important. Netflix already has the highest debt to earnings or EBITDA, whatever ratio. And there's been more and more focus on these levels being pretty high for a lot of these streaming companies. And look at the price of content. I mean, you want South Park, it's $500,000. They're going to have to spend more than ever to compete and stand out. And they're issuing this debt while having those concerns hanging over them and already having a high a high level of indebtedness.
But it's smart to do this now as opposed to later when the competition actually starts, because the worry, of course, is with all this competition, they're boxed in when it comes to the ability to raise price. And so if they can't raise price, they have to raise funds some other way. They should raise as much as they can right now.
When interest rates are as low as they are.
Exactly. Well, Dunkin' Donuts is betting big on meatless mania. Dunkin' tested its Beyond Meat sandwich in New York City over the summer and quickly became the coffee chain's top-selling item. Now the plant-based sausage sandwiches will be available next month in more than 9,000 stores nationwide. Beyond Meat did rally on the announcement earlier in the day, but has since turned barely positive.
Not a good look at Beyond at 110. I mean, this thing, it's come down almost as quickly as it went up.
Where was it?
That's a good, where we talk about, 175, something like that?
It's close to 200?
It might have, but IPO'd at 25, let's remember. Best performing, probably IPO of the year. And if a headline like this is the kind of headline in the past,
239.71.
Wow.
Yeah, 239.71.
It's been cut in half and then some.
Right. Lockup expiration, by the way, is October 29th. So it could still face some volatility ahead. Well, the S&P 500 communications services sector is the second best performing group this year, up 23%. 3 of the 4 FANG stocks, Facebook, Google, and Netflix, are in the sector, and they get the most of the attention. But they don't pay dividends. Dom Chu's taking a look at the communication services stocks that do. Dom.
All right, so Melissa, if you take a look at the way that we found these particular stocks, we went hunting for yield because not all comm services companies are all just about that hyper growth. Some actually pay investors. We looked at a screen. What we wanted to take a look at was all the S&P 500 companies in the services sector, in the communication services industry, that pay a dividend yield of at least the 10-year Treasury, which is about 1.8% right now. And then among those, how many have positive 3-month performance and year-to-date performance at the same time? It's interesting because these 3 stocks came to the top of that list. First of all, it's AT&T, and then there's also Verizon, and then there's Comcast, which is the parent company of this network. If you take a look at the price performances over the course of the last 1 year, you can see Verizon up 11%, AT&T up 17%, Comcast up 28%. But take a look at these dividend yields because that's one of the reasons why some investors might be a little bit more high on these stocks. AT&T's got a 5.3% yield and positive 3 and 12-month price appreciation. Verizon, a 4.1% yield, and Comcast, a 1.8% yield as well. So as we take a look at the reasons why communication services, Kelly, one of the hottest sectors so far this year, yes, it might be the growth expectations for some of those social media companies, but old world cable and tech companies are making up a lot of that ground here, and dividends, Kel, might be one of the reasons why they are outperforming. Back over to you.
True. Dom, thanks very much. Dom Chu. The NBA season tips off tomorrow. Any headlines around this one lately? The first game was supposed to feature the most exciting rookie to enter the league since LeBron James, but Zion Williamson is hurt, and yes, the China controversy is overshadowing everything anyway. Could the issue hang over the whole season? Stay with Power Lunch.
No one wants to get caught in the cold in London. We're with you. So our boilers come with 2 years interest-free credit to avoid a big chill to your wallet. You'll get a 5-year British Gas warranty. And now we can even quote by video call after work or weekends at a time that suits you. Get a quote by the 30th of November and get £150 off a new boiler or £450 off for existing home care customers. Search British Gas New Boiler. Conditions apply.
Hi, this is Brian Weber, host of NFL First and Goal every Sunday, kicking off at 1 Eastern only on TuneIn Premium. Be sure to listen this Sunday for the ultimate football fan experience, featuring 7 hours of commercial-free coverage of every scoring play around the NFL.
Start hearing more of what you want.
Upgrade to TuneIn Premium and get over 45 commercial-free music stations,
Live commercial-free news,
and every live NFL, MLB, NBA, and NHL game.
Visit TuneIn.com/premium to upgrade.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Major League Baseball postseason is in full swing, and TuneIn Premium puts you at field level for every...
And it's a home run!
Single...
And gone!
Game.
And that gone, a home run!
With TuneIn Premium, catch every pitch of every inning of every Major League postseason game until the final out of the World Series.
0-2 pitch, little half swing, and it hit...
At home or on the road, Major League Baseball's postseason action is on TuneIn Premium.
That ball is gone.
Upgrade today.
Did you know your favorite radio stations are in your pocket? Yes, the TuneIn app lets you listen to the same radio stations you pick up on your home or car radio anywhere you want. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
The Better Network is now on TuneIn. This is Brent Musburger. Search the Better Network. That's the BETR Network. And then let us get you better prepared to better enjoy the day in sports. The NFL, college football, basketball, hockey, baseball. Sharpen your edge. The Better Network is now on TuneIn. Be better informed. Be better prepared. Search the Better Network. That's BETR.
China's state broadcaster CCTV warning this weekend that NBA Commissioner Adam Silver has defamed the country and that he will receive, quote, retribution sooner or later. This in the wake of that infamous tweet from the GM of Houston Rockets, Daryl Morey, and one day before the league tips off. So joining us to discuss all of this is Shams Charania. He's senior NBA insider from The Athletic and Stadium. Shams, how long do you think this China issue is going to linger over the league, or once the games start, will most fans just say, who cares?
I mean, in America, most fans will move on to the season once things tip off on Tuesday. But there's no question, this is a backdrop throughout the NBA, throughout the league. The league still has a lot of uncertainty as far as what the next steps are with China. And a lot of NBA teams are monitoring whether CCTV will start to broadcast their games and put the games back on broadcast starting on Tuesday, or whether they will continue to blackball the NBA from playing in China. And I'm told the league, Adam Silver, league officials are in consistent communication with Chinese officials on where this is going. But there's no doubt there's uncertainty where this relationship stands. And it stands to be a question of billions and millions of dollars
and cost
for the NBA.
And cost not just the league, but individual franchises that have tie-ins there, potentially, as you say, billions of dollars. Is any one team more exposed than others?
There's no question it's the Houston Rockets. Daryl Morey, the GM, is the one who put out the tweet. And since then, China and the Chinese government, streaming partners, sponsorship partners, they've all essentially parted ways with the Houston Rockets and are determining whether they want to move forward with any type of a deal. And there's a belief around the league, around ownership levels, around league executives, that's more of a long-term situation where Houston is really going to be in the dark on a lot of deals in China for the interim, for at least the short-term future here.
Yeah, and Adam Silver's talked about how much money it's cost the league already. Shams, is there truth to the idea that this might lower the salary cap next year?
Teams don't know. It's definitely a possibility if China pulls out its billions and millions of dollars of agreements with the NBA and its teams. There's no question it's a possibility. And there are a vast amount of players, teams, agents, executives, all preparing potentially for the possibility that the salary cap does fall, but it's not a guarantee. There's a lot of question marks.
How mad are the players at, let's say, Daryl Morey or at potentially Adam Silver, though I know he's very popular and skilled? How mad are they that this may end up costing them money, not just in the form of maybe a reduced salary cap, but sneaker deals?
I think the frustration really lies in that they're being asked these questions. They're the ones being thrown into the fire on a daily basis, or were. The Lakers and Nets were in China, where no one really had an idea about safety there. No one had an idea about what questions the overseas media would ask them. And the Lakers and Nets met with Commissioner Adam Silver in China and determined that they would not speak to the media. Adam Silver, there was a part of his pitch was, listen, let's get you guys out in front of the media and so you guys can back the league's initiatives on freedom of speech, freedom of expression. Mm-hmm. And LeBron James was one of the prominent players that essentially pushed back and was like, listen, I think the league and we all need to figure this out before the players see it. And Adam Silver has been very, very helpful with the players and at least listening out whatever he can and how he can work with the players. And at the end of the day, the right decision was made. But that's really where the frustration is that these players and teams are being thrown into it when it was really just an isolated executive tweet.
Shams, Zion might have pushed all this to the back burner tomorrow, but he's not going to be playing anymore. So, what do they do now, especially when he just continues to be plagued by these issues? This is somebody who could have been the biggest star of the season and who the TV schedule presumably revolves around. And what happens if he's missing from it for now and again and again?
Yeah, I mean, this is it's a big loss for the Pelicans, big loss for Zion Williamson, big loss for the league. He's a star player already. We saw it in preseason. He averaged 20, he had a lot of 20 in 10 games already. He was a star. He played a lot of minutes in preseason, and they've essentially declared him out indefinitely. But I'm told there is growing concern over that knee and whether there is damage in that knee. And the Pelicans haven't put out a release since Thursday. The assumption is that they will put a release out before Tuesday's opener in Toronto. But, as one person told me, close to the situation, is there's something going on in that knee, and it's going to hold him out indefinitely. It'll remain to be seen how long he's out. But, I think around the league, there's hope that this is also positive because it allows him to then focus on his fitness, his body, and essentially just get right for the long term.
He plays a very vertical game, and of course he's 285 pounds. I got to get your pick. Tomorrow night, my favorite broadcaster, Kevin Harlan, has the game, Clippers and Lakers. Who wins in the West, and who do they play in the finals?
I'm going, I'm stumped between the Lakers and Clippers. I'm going Lakers in the West. I think they play the Philadelphia 76ers. Top to bottom, I believe that the Sixers are stacked. I think that their team is loaded. The question will be how these players mesh. Will Al Horford fit on this team at the 5 or the 4? They brought back Tobias Harris, brought in Josh Richardson in the trade for Jimmy Butler. So they're as deep as it comes. Milwaukee's also going to be a threat out east. But between the Lakers, I think Nuggets will be in there as well out west. But there's, this league is as open as it's been in quite some time.
All right, it's going to be an interesting game to watch, that Lakers-Clippers. And if it's a boring game, I promise you, Kevin will make it very exciting. Shams Charania, thank you.
Thanks, guys.
We've got some more details on that breaking news on Teva Pharmaceuticals' possible global settlement. Let's bring in Meg Terrell for the details. Meg.
Hey, Melissa. Well, we saw Teva's stock jump quite a bit on the news that it had reached this framework for potential global settlement on all the opioid cases facing it. Now, it said it had reached that settlement with 4 state attorneys general, which are leading the negotiations, and implied that it might stretch to all of the litigation, including with cities and counties. While we checked with the co-lead plaintiffs representing the cities and counties, and they say no. They're not on board with this potential framework from Teva, telling us, quote, this appears to be the same proposal that 17 municipalities rejected on Friday, and we don't see that changing. So you are seeing Teva's stock come back a little bit from the 13 to 14% it had been up earlier, as this might not actually be the end of the road for Teva. Now, as part of this global framework, they say they've offered to supply drugs to treat addiction up to $23 billion worth over 10 years, as well as up to $250 million in cash. But guys, we are hearing that is not a done deal just yet for Teva. Back over to you.
All right, thank you very much, Meg. And closing bell will start after this short break.
London, switch to Vodafone, the UK's best mobile network, and Be Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
Get ready for Brexit on the 31st of October. This means that travelling to the EU will change. You'll need to check online if your passport is valid for travel to Europe. If you're planning on driving, you'll need to check if you have the right documents to drive. And make sure your travel insurance covers all your healthcare needs. To keep your trip on track, check what you need to do at gov.uk/Brexit. Get ready for Brexit on the 31st of October.
It's going to be a bit chilly today. And with the worst of winter yet to reach London, you don't want to wake up to a broken boiler. We're with you. So that's why with British Gas Home Care, we've got your boiler covered 365 days a year. We have thousands of engineers on hand to help get your boiler up and running again, and all from just 46p a day. Buy selected home care products online by the 28th of October and get 1 month free. Search British Gas Home Care. Conditions apply. Prices vary by postcode.
Can I have chemo at home?
It's only suitable for a couple of types of
Type
cancer.
of treatment. So literally just
The doctor will decide.
When you search one question about cancer, you end up with millions of results which contradict each other. For clear and uncomplicated information, come to Cancer Research UK. Visit us online or give us a call on 0808 800 40 40. Cancer Research UK. Together, we will beat cancer.
Sean, tell us about your upcoming Shaun the Sheep movie.
Oh yeah, that was a good bit.
Really? I never looked at it that way. Wow, you do your own stunts. Wait, that's my line. See Farmageddon, a Shaun the Sheep movie, as part of your year of endless adventures with Meerkat movies. Oh, spoiler alert. You just gave away the ending.
Qualifying purchase required. Tuesdays or Wednesday. Participating cinemas. Standard ticket only. Cheapest ticket free. One membership for 12 months. Conditions apply.
Welcome to the closing bell, everyone. I'm Wilfred Frost. I'm here at the Boeing Post today. That stock is down 4% following Friday's 7% slide. The broader markets, though, holding on to gains, 0.6% of gains for the S&P 500 with 59 minutes left to trade.
And I'm Courtney Reagan in for Sarah Eisen. Let's look at what's driving the action today. Brexit uncertainty as Boris Johnson faces opposition in Parliament to the plan he negotiated with the EU. Then we've got trade optimism. China's vice premier claiming substantial progress, and President Trump saying they're on target. And Treasury yields are moving higher today with spreads widening. Joining us for the hour today is Barbara Duran from BD8 Capital Markets. Barbara, thank you for joining us here today. So we've got a lot of forces at play again, another kind of sideways market, but some risk appetite if you look at what's moving higher today.
I agree with that. I think the action has been very constructive, and I think what's going on is you've seen the earnings expectations come down. You had just a little sample last week, but majority of companies beat earnings, and the most important thing, I think, was really JP Morgan and American Express talking about the strength of the consumer in loans and spending, and that's really the underpinning to the economy. So we also know the Fed, they have a meeting coming up. I'm not expecting to cut rates, but they have made it clear they stand ready, and I think that forms an underpinning for the market. And not to mention China. We've got a little truce there. But
I think that we were all expecting some more downbeat commentary from what we've heard so far. You brought up JP Morgan speaking about the consumer, but so far it's been okay, maybe restrained, but not so negative from the executives.
Exactly. Things are definitely a little bit slower, but that's what people are waiting to see. What do the companies say about the consumer? Because they're the ones who are getting it just the day before. So it's encouraging.
By the way, today you take Boeing's negative effect out of the Dow and all of the major indices healthily higher. Coming up, by the way, an interview with Secretary of State Mike Pompeo. He'll weigh in on energy, Syria, Ukraine, China, and much more. That is about 5 to 10 minutes away. Don't want to miss that.
But for now, we're going to focus in on the big stories that we're watching today. Phil LeBeau has the latest on Boeing, as Wolf was just discussing. Mike Santoli has his market dashboard. Meg Terrell is covering the opioid settlements for us in Ohio. Wilfred has the latest on Brexit. Phil, we're going to go ahead and start with you today.
Courtney, a lot of analyst downgrades. I know Mike will be talking about that in just a little bit, but here's where things stand with Boeing today. The board is meeting in San Antonio, Texas, day 2 of a meeting. Not sure if we're going to get any announcements at the end of the day. Meanwhile, over the weekend, there was a release from a congressional committee of a 2016 Boeing employee survey where a sizable number of those who were surveyed said they felt pressure in terms of moving the certification process forward when it comes to the 737 MAX, which gets right to the heart of the questions about the culture of safety or whether safety is emphasized at Boeing. And finally, the big question today, will the return of the MAX be delayed? Just for a point of reference, Boeing is maintaining its guidance that it expects to have a return to service, at least one regulator signing off on it being safe to fly by the 4th quarter. But as you can see, the 3 U.S. airlines that fly the MAX, they're not expecting it back until early next year. Also today, Boeing CEO Dennis Muilenburg putting out an employee email essentially saying they are making steady progress on the return to service for the 737 MAX. Guys, that is the same message we have heard from him for several weeks. So not a whole lot of news in that employee email from Dennis Muilenburg.
Phil, clearly this extra reported information that Boeing may have been aware of back in 2016 is not helpful for that cause. Is it particularly damaging given that there were 2 crashes? It's not like one appeared somewhat out of the blue. When you have this early information and a first crash, does it not raise significant questions why the plane was not grounded before the second crash?
Well, certainly those questions are swirling around, Wilf. There's no doubt about that, especially given the information that came out on Friday. I think the important thing to keep in mind here is that this information which came out on Friday, the biggest impact may be what it does to the mindset at the Federal Aviation Administration, because they just found out about it this week when Boeing shared it with the Department of Justice back in February. Now Boeing will maintain, look, the reason that we share stuff with the Department of Justice is because it's an ongoing criminal investigation, and we don't want to do anything that might hurt that investigation when they're looking at other entities here in the United States. So as a result, Boeing believes that they're doing the right thing by only giving with the DOJ. But you have to wonder if the FAA, which already feels, they went out there on a limb, sticking by the MAX while the rest of the world grounded it, and now they are feeling like, well, look, you're not giving us all the information that we need as we're investigating this.
Phil, as always, thank you very much. Let's get over to Mike Santoli for today's market dashboard, which involves Boeing.
It does, Wolf. As a matter of fact, that's the first one. Normal turbulence, is that what investors and analysts of Boeing are experiencing right now, or something worse? Take a look at that. And then clearing customs, overseas markets looking like a little more of an attractive destination based on the market's action. Initial descent, going to look at Beyond Meat in the context of other boom-bust IPOs of recent years. And then hard to spread out. What are corporate debt spreads saying about the macro backdrop right now? First, though, look at the analyst consensus set up on Boeing. You'll see a loss of conviction here. First of all, I want to point out in January, you had 20 of 24 analysts with buy ratings. This was one of the most high conviction large stocks out there. Obviously, this is orange, is the actual stock price surging toward the target price when she got to March. Of course, that was the crash news hit at that point. What I do want to point out right now, you're at about 50-50. You have about half the analysts still are rating it a buy, half not. The price target, though, is still on a consensus basis at 417. Still implies more than 25-30% upside for the stock right now. That suggests there's still room for sites to start getting lowered and basically people to lose their nerve a little bit more before you can say the stock is truly washed out. Now, on a valuation basis, what's happened here is obviously the stock rushed to a huge valuation premium, multi-year highs in valuation, the high 20s forward multiple in terms of PE. Now what we are is we're down to basically the 5-year average, still a premium to the market, right? So 1.1 times the S&P's forward multiple. So that suggests that you built up this huge premium, you've given it back, but it's not yet gone to a level where people are applying much of a discount just yet. Basically a lot of faith in that long-term order book and free cash flow still in place, guys.
That is a very interesting evaluation of all of that, with the valuation still sitting at about the 5-year average, despite everything that we've seen. Thank you, Mike. We've got some breaking news on opioid settlements. Let's get right out to Meg Terrell. She's in Ohio with the latest. Hi, Meg.
Hi, Car. The news is coming fast and furious on these opioid settlements today. The most recent, of course, is about Teva Pharmaceuticals. That stock had jumped earlier this afternoon on a statement from the company that seemed like they had reached not just a settlement here in Cleveland to avoid going to trial on the first federal trial, but potentially a broader, more global settlement with states and municipalities around the country. However, we have reached out to the co-lead plaintiffs' attorneys representing the states and municipalities involved in this federal trial, and they say they are not on board with this framework that Teva has put out there. Now, what Teva says this includes is about $23 billion worth of donated drugs to treat opioid addiction over 10 years. It also says it includes up to $250 million in cash over 10 years, no admission of liability. They say they've reached this framework with the 4 state attorneys general that are leading the settlement negotiations. They also say there are potentially other defendants involved. So we're continuing to dig on this and find out more, but it does not sound like this is a done deal for Teva. Meanwhile, the first federal trial was supposed to start here in Cleveland today, involving multiple defendants. They all reached a settlement this morning, minutes before the trial started, including the 3 big drug distributors agreeing to pay $215 million to avoid that trial. However, guys, there are thousands more cases still out there, and people are trying to work toward a broader global